Hello, once again. My name is Messiah. I am the floor advisor and operations oversight for Transit Investors, and today we're going to be talking about our third week and investing in our four stocks. We'll get into the first stock, ONIAC Inc. On Friday, ONIAC Inc. had a decrease of about 0.19 or 0.26%, going from $73.49 to 73.30 roughly. And just looking at recent news for ONIAC, they actually rewarded their shareholders a 6% dividend hike, and it will now be 38.75 cents, which is going to be payable on October 30th, 2019 for all the stockholders that are on record as of October 10th of 2019. The new annualized dividend rate of the company is also now $1.55, and the current yield of the company is 3.43%, and that's an improvement of the industry's 2.83%, and the S&P's 1.9%. And because of that, we will continue to stick with ONIAC. The next stock that I'll be getting into here is Intuitive Surgical. So they had a decrease, unfortunately, of 9.56 or 1.76%, going from 543.29 to 533.73. But as of recent news, it's been looking great for Intuitive Surgical, as Robo Global recently created the Robo Global Healthcare Technology and Innovation ETF, which gives exposure to all these companies that do technological surgeries and things and such. So that's really good for Intuitive Surgical because, as you know, they have things like the Da Vinci, where they have like technological advances that do surgeries for them in the medical field. And because of this exposure, it's probably going to make it even more common in the near future. So because of this, of recent weeks, Intuitive Surgical has become more and more common among the news. So I think we'll keep on sticking with Intuitive Surgical. Seems like a great idea. So next company is Terraform Power Inc., which had a decrease, went down only 0.06 or 0.31%, going from 17.89 to 17.83. But ever since last week, there hasn't been much recent news. It's pretty much been the same big news about Terraform Power Inc., which is that they have surged 57% year to date, and its estimates of dividend per share are at 81 cents of the fiscal year 2019 and 85 cents for 2020, which matches the long-term goal of the company of 5 to 8%. So we are going to continuously analyze Terraform Power Inc., but we also might try to source out what our other options are to possibly make more profit off the stocks that we invest in. And then lastly is the United Parcel Service, which continuously is doing a great job. Out of all the four companies I invested in this following week, it's the only company that had an increase on Friday, going up 0.50 or 0.42%, jumping from about 118.45 to 118.95. And they've been just killing it. As recently in news, they're creating 1,000 high-paying jobs in Louisville with $750 million investment, and the wages are expected to be about $70 per hour. So that's great news. And also, they're still doing well compared to its competitors like FedEx, that's been kind of like under the radar. So because of the recent progress, we will continuously invest in UPS. Did invest in an extra stock to try to like source out more options, and the stock that we chose to invest in was Entergy Corporation. The reason being because doing our research on Entergy Corporation compared to the other companies where we were comparing it to, Entergy Corporation has had progress throughout the years. It has just been steadily going up. It's not a point that it's been continuously or consistently going down over the years. Over the years, it's just been going up. Now, it did have a decrease or drop in closing price, but it was only 0.05 on Friday. But ever since we looked at Entergy Corporation, it's had nothing but steady progress going up. So we decided to invest in this stock as well and see how it might go. So I'll be talking briefly about some of the companies and how they've been performing this week, and whether I feel like we should continue to invest or buy more stocks or shares of the company, or whether we should move on from the company and sell shares of the company. Starting with Axon Enterprise. Axon Enterprise closed this week at a price of $58.31. This is a 1.19% decrease from the previous day, and it continues a trend of a decrease in closing price throughout the week. Given that this has been a trend from Axon, they currently show a day's range at $57.61, $59.32, which is not a large day's range. And the closing prices from Axon Enterprise has shown great variation throughout the months. I believe the most logical thing to do
is to sell some of the stock because it's already caused a significant loss of money that the group has seen in the portfolio since we invested in it. In addition to Axon, we also had iPath, S&P, the oil company. This past Friday, the stock closing price for iPath took another hit with a decrease of 1.17% and a closing price of $11.43. The most logical thing to me seems to do well with iPath would be to sell all shares of the company, not just some shares, but to sell all shares. The $11.43 closing price that we're seeing from iPath differs drastically from the $12.45 that our group bought the stock, the 3,500 shares of the stock for. The current market value is currently $40,000.04, $40,000.04.30. This stock has already cost our group an immense amount of money, and I believe that we should sell all shares of the stock. The last stock is the Brookfield Infrastructure. Brookfield Infrastructure last closed at a stock price of $49.05, which marks a 0.51% decrease from the previous day. While this Brookfield has marked a small decrease, it's been showing a solid increase over the past few months, and it's shown some version of decrease, even though it's shown some version of decrease over the past 2 weeks. All trends show that Brookfield will be continuing to grow over the next coming months, and I believe that it will continue to. That this is a great time to buy Brookfield stock because it's at the lowest point it's probably going to be in the next couple of weeks. It has shown a profit of $1,472.66 and a market value of $46,008.90. This is what I believe we should do with the stocks and the companies we've invested in. Thank you.
So good evening. So this week I want to talk about the different changes that were made to the portfolio this week. So on September 24th of 2019, we decided to trade CareTrust REIT Incorporated. Out of the stock, we sold 205,729 shares of CareTrust REIT Incorporated. So the stock was bought at $4,725,595.13, and we sold it for $4,803,782.15. So this gave us a profit of $78,182.02. The decision was made to sell the stock because we were looking for more short-term investments rather than long-term investments like real estate. So I think this was a positive decision, and will increase our profit for the portfolio. So the company that we decided to trade the previous stock for, CareTrust REIT Incorporated, is Entergy Corporation, and this was purchased on September 24th of 2019, and we bought 40,232 shares at a price of $117.07. And on Friday, September 27th of 2019, the stock price closed at $117.50. So this gave us a profit of $17,299.76 on the stock, and currently it's being held at a market value of $4,727. $4,727,260 even. So this stock caught the eyes of me for the portfolio because it's been performing very, very well, and we think that it'll be very good for us. So other than that, the other three stocks that I still currently have is Facebook Incorporated, Google, which is Alphabet Incorporated, and AT&T Incorporated. And all of these stocks have been continuously doing well and bad at the same time. So AT&T is doing pretty well continuously. Google, Alphabet Incorporated did pretty bad last week, and Facebook also did bad. So we're going to keep an eye on both of those and continue to lean on AT&T Incorporated. So that's all we have for you this week. Thank you.
Hello, my name is Jamal Wiley. I am the lead advisor for the investment group Transcend Investors. I want to point out that ExxonMobil said on Thursday that they are selling its upstream assets to Norway. Well, they're selling their upstream assets in Norway for $4.5 billion. This sale involves more than 20 producing fields operating mostly in a Norwegian energy company located in Ecuador. The transaction is part of a plan to divest approximately $15 billion in assets by the year 2021. The transaction is expected to close in the fourth quarter of 2019. ExxonMobil will continue its downstream refining in Norway as it has been in the past. ExxonMobil has been having a challenging time lately since the oil crash and the drone attacks. I would like to note that the company's stock price has not improved notably any time recently. Energy demand has grown significantly as the world has become increasingly industrialized. That alone should support increased oil and gas demand.